Is it time to buy the dip? The stock market crashed. So we're going to look at that. We're going to look at historical stock market crashes, talk a little bit about fundamentals, and give you guys some ideas. I'm going to get into that. The first thing, though, I want to show you is the bots. This is the main way that I've been trading. This is the last 90 days. You can see it's up $10,000 on this account, and it's up about 66% on this account, and it's totally hands off. And the way that it did it on the most recent play was it was short the altcoin market on this recent puke. So we're in a very interesting situation, and for many of you guys, this is the first crash that you've traded. For me, it is. This is the first time I've been trading when there is a. Well, that's not necessarily true. I traded through 2022 and it didn't happen in equities, but the April, May dump in Bitcoin where we went down 50%. So, but as far as like a global correlated crash, I started trading after the COVID crash, which happened in March 2020. My first entries into the market were around May and June of 2020. So, is this going to just be reversed to new all-time highs? I have people saying that they think it will. I will say, hey, we have a trading system, and I call that system Market Timing Pro. It's a trend following system, and that system, something that works very well with it is not trading under the 200 moving averages. So we're just going to pull that up and show you guys the 200 moving average. So the trading system, it's not trading under this 200 moving average. So you see it exited at 20,300, something like that. And we have priced at 17,700. Having this moving average allowed us to not trade during some extreme bear markets. And we're going to look at some of those crashes. But essentially, my system is not trying to buy a bottom. It's well, we can look at the COVID crash. When did it end up buying? Coming out of the COVID crash, it bought. But it didn't buy the bottom. But it also didn't buy any of these false bottoms in the 2022 market. So there's trade-offs to that. But what I found is putting in this filter and not trying to pick a bottom is pretty powerful. So essentially, as long as we're under this blue line, I'm not planning to buy. And this is basically every asset is under there. Bitcoin's a little bit closer. But I'm going to talk to you guys about a little bit about what happened and my idea of what might happen. So first of all, the fundamentals coming into this year are the market was severely overvalued compared to GDP. There's a huge amount of leverage in the system, and it was ripe for a crash if it had the right catalyst. Now, Trump came in with a catalyst, and that catalyst is significant tariffs worldwide. So based on that, the global markets immediately repriced significantly lower. So we're talking about over a 20% correction in a short period of time. Right now it's down 15%. And if you look at global markets, the Hang Seng Index is the, what is it, Taiwan or Hong Kong? What is it? Hang Seng? I think it's Hong Kong. It's down big if we look at the Japanese stock market. So this is a global thing. Now, these did come into key levels. Like, look, it swept the low from just perfectly took the low from August 2024. It's coming in. If we look at the UK market and we see, okay, is this the bottom? Is it going to rally to new highs? It might not. So there's a couple possibilities that we need to be prepared for. Now, the first thing I'll say is, while the repricing is pretty drastic and it's probably pretty oversold, and there's probably a lot of margin calls that came in. And what I can say is the low that happened in the August mini crash last year also happened on a Sunday night in futures and then didn't go lower. There's still some reason to be cautious, and I'll tell you why. So, first, what's bullish though is the tariffs cannot be, it's hard for them to be higher than they already are, although the Chinese are threatening higher tariffs. Essentially, Trump came with maximum tariffs to begin with, and in all likelihood, they're going to be negotiated down from there. So, most of the news is probably going to be positive of, oh, this tariff came down, oh, that tariff came down. So, that's one of the reasons why we can expect a rally. However, a lot of the tariffs have not even come into place yet. I'm recording this on the 7th, and some of those tariffs are going to come into play on the 9th. What that means is we haven't felt the effects yet. And it's my belief that the tariffs would cause a regime change. And that's why there was such a reaction. What do I mean, a regime change? Well, the tariffs create a scenario where there will be a recession. Now, a recession looks like GDP contraction and also higher than normal unemployment. I know, or we suspect that there's going to be a lot of layoffs coming, and there's going to be friction to the cost of doing business, which is likely to cause a um, it's likely to cause downward pressure on the market. Now, if we could compare this to the COVID crash, as a similar move. The COVID crash was greater. It was about 30%. If we look at the NASDAQ, this is about 26%. Well, for the market to immediately rip to new highs, what happened in COVID is they cut rates to zero and they started pumping liquidity right away. I don't think we can expect that to happen right now because nothing is broken. There's no looming threat. Right now, it's just equity prices coming down. I expect something will break, but since it hasn't yet, there's no stimulus on the table. Nobody's talking about stimulus. People are suspecting rate cuts, but they're suspecting rate cuts based on something breaking that hasn't broken. So, to me, one of the possibilities that I'm looking at is we get a significant bear market rally. Perhaps price comes all the way back up here. But because of the regime change, it's possible we will go lower. It's also possible because of seasonality we'll go lower. You know what they say, sell in May and go away. Well, that's not how it always works, but it's more than a meme. It does have meaning. So for example, in the 2022 bear market, there was a March-April rally, and then prices sold off, and then we didn't have our next rally until January. A lot of the time, if January starts bearish, the whole year is bearish. If January starts bullish, the whole year is bullish. So we could think this whole year could be bearish up until January, possibly. Now I just showed you one, but not always, but some of the time. Let's go to the SPX. The It's more true for Bitcoin, but we have, yeah, when was the bottom here? February, March started. It's possible. We don't need to put too much into seasonality, but like the 2000 topped in April, May. So for me, I would say if you're dollar cost averaging here, it's probably okay. If you're shoving with your entire stack, I mean, honestly, again, I'm not doing it. I'm sitting it out. I'm letting the bots trade. And I'm trading MTP, which doesn't trade under this 200 moving average. There's definitely worse places to buy. right? Like buying at all-time high up here, not so good. Buying after a crash, probably okay. It might take a while. It might go lower first, but there's worse places to buy. I'll take a look at gold. Gold had a sharp pullback, but if you're trading MTP, you're still in gold from lower. And then we also have Bitcoin, which Bitcoin would have given a buy signal, taking out this low, and perhaps gave a short-term buy signal, but it is under that 200 moving average. And it's possible we see something like this where we get another rally and then I don't know that it has to happen. I mean, for us to make give a breakout buy, we would just have to get above this March low. This March, I guess this high is in March. Um, and we've got this April high. If price starts to come up here, like in May, hey, we could have breakout buys on Bitcoin. It's possible. Um, it is interesting, actually. Bitcoin showed a lot of relative strength. It's down about 30, a little over 30%, which for a global market crash is not too bad. And then if we were to look at the altcoin market, it's corrected 60% back into this demand zone. So it could, I'm just saying be cautious. I'm not personally not buying here, although I was very tempted to just start transferring funds and buying stuff. I'm gonna be disciplined and stay out under this 200 moving average. And if prices get insanely low, like I'd be interested if goes back to 49 or something like that. Buying a dip there would be pretty interesting. I would be interested. It's just not a trade yet. So one more fundamental I want to throw out there is even if the tariffs are slashed, I think it's hard for markets to go back to all-time highs right away because Trump represents so much uncertainty and the market does not like uncertainty. So it's pretty unlikely that it happens, but it might take a while for a price to make a new all-time high and sustained because of that uncertainty that hangs over the market as long as Trump is president. So, yeah, this is our system, and I'm just waiting. I mean, so far it's saved me money and made me money, and I'm not about to deviate just yet. It's tempting to. I actually did take a little Bitcoin long in here last night with a TP um, at 80, but I'm not. I mean, we're still making lower lows and lower highs too. And also, if we were to look at the funding rate, it's been showing bottom, but the local one it didn't. Because traders, despite how much liquidations there were, funding is still positive. So that means that most traders are long still, um, and have been long. So I'm leaving it alone, and you guys do whatever you want. But a lot of volatility, and I welcome volatility. Okay, appreciate y'all. Much love and happy trading.